Welcome to the Grow Your Business and Grow Your Wealth podcast with Gary Heldt. Gary is an expert in helping business owners put together a plan that will provide a better future for their businesses, themselves, and their families. On the podcast, Gary interviews other professionals who share his vision, and together they share secrets and strategies any business owner can use to build a better financial foundation for your business and your life.
Hey, welcome back to the podcast. This week, my guest is Erik Brenner, and he is the president and CEO of Hilltop Wealth and Tax Solutions. Erik has helped affluent professionals simplify complex wealth decisions by serving as their dedicated personal CFO, integrating tax strategies, retirement income, and legacy planning all under one roof. Welcome, Erik.
Hey, thanks, Gary. It's great to be here.
So, Erik, give us your background, kind of, before you became the CEO and president. What did you do before? What got you excited about, helping people with their wealth accumulation and different tax strategies?
Yeah, if I go way back, I was born, I think, an entrepreneur. My father and was an entrepreneur and owned a business. Him and my mom for many years, 25 years, and so I grew up in that business. It was an automotive aftermarket type business, and really learned a lot at an early age. I would go to work if I had a day off school, and I would often go to work with him and not get dropped off at noon. I would get up bright and early and go to work. So it really taught me a lot of things about work habits and guiding people and helping people. And when it came down to it, we were starting to think about his succession, retirement, and where was the business going? And I just didn't see myself doing that. So we structured with some assistance, but helped structure it and sold the businesses. And I was looking for really another business, not knowing what I wanted to do in business, but kind of, again, grew up that entrepreneur, looked at several opportunities, and being an advisor came up as an opportunity, knowing that, it was going to be a hard business in a lot of ways, but really low capital in. So then what had happened is once I got into the business and started working, that was 32 years ago. And it's really developed into, more complexity and more specialty in working with folks, like a lot of professions, Gary, medical profession, law, even tax and accounting, can't do it all for everybody.
Right.
And so that's what brings us to the point that we're here today.
So, in looking at everything, you're somebody's personal CFO. What do you mean by that?
Yeah. So what we found over the last decade is, we were coordinating a lot, other professionals. So our clients' professionals, again, an attorney, a CPA, maybe an insurance person. So we were providing coordination with that. And we found often there really wasn't any or very little coordination, right, of each talking to, and really focused on the client to make sure that they're covered in all areas. And so as we thought about that and thinking about the structure that exists for the ultra wealthy, the ultra wealthy families and what they call a family office. So a family office is structured to basically take care of anything financial, insurance, they're put together to help advise and guide this family. And of course, a family could have hundreds of people in the family, right? And so what we wanted to do was bring the family office down to middle income America. We thought, why does the ultra wealthy get that and people that really need it don't have that? So several years ago, we started a tax business. And so we have a fully integrated tax business where, we work with folks on a tax perspective. We have integrated from an estate. We can help people start to finish on estates, insurance, investments, decision-making. And so what we said is, we're really your chief financial officer. You're the CEO, but we're here to help you make all those decisions and guide you along your financial journey.
In going through that process and helping people, what are some of the common mistakes that you're seeing, these people make when it comes to, the wealth accumulation and taxes and estates and so forth?
So I think a couple things. One is that they often are somewhat in siloed, meaning they might have investment advice. They might, they get their taxes done. The difference between tax preparation and tax planning. I think the tax planning piece is often overlooked. They may have an attorney that maybe they've haven't talked to for years. Maybe they don't even have an attorney. If someone is not in a position really, and they have a career and a good career, but they don't really need legal advice versus a business owner, you may have an attorney or at least somebody that you've worked with over the years. So I find that they are thinking of these things often that are really segmented and they're not working together. The other piece is, there's a point of working in it and then working on it. So what we help people think through is, we give them the opportunity to plan and think about working on it versus, you're in the day to day and a month goes by and then a year and then 5 years. And before you know it, you're down that financial road where, it's like, where did the time go? So the coordination, I think people's mistake is it's not coordinated. And the other piece of it, and the reason why we think that, tax we see as a really differentiator from a standpoint of, there's people just don't know the tax laws, nor should they. And, there's a lot of opportunity that often can be done from a proactive approach from a tax perspective. Mm-hmm. And, I don't care how much money someone makes, how wealthy they are, right? Taxes is, you bring that up, whether it's real estate taxes, sales tax. I mean, tax is just this bad word and people hate paying it.
Well, I don't think anybody likes paying it,
No.
for sure there. Um, in going through from the tax side of things, because so many times, we're taught when we're younger, it's like, oh, you got to keep, got to keep the IRS and the state at arm's length. You don't want them, you don't want to push the envelope or anything like that, with them. So many people, just put their heads down and just try to accumulate as much as they can. Then you're on I'm going to say, the backside of things, and then you've done all this accumulation, but now you got a big tax bill to pay. How do you guys help people with that?
Yeah, no, you're right. I think, especially as, if your income's going up and, you're making a good income, you have the income to pay the tax, most people. So, and then there's a matter of how do you save? Do you, take it to where you get a deduction today or not take a deduction? And what I would say is a couple things. One is that, there's really what we consider 3 levels of tax planning. One of them is savings. How do you save? Where you save? And what are the implications now and in the future? One advantage we bring is we have a lot of experience in working with people that are at the other end. And we help those people at the beginning. So we helped them as they climbed their financial mountain and now they're coming down. And so we see what happens on the other end. And the other end can mean higher taxes in retirement. Just because of the way things are taxed in your income streams, IRA distributions, and so forth. So that's first is saving, kind of in that bucket. Then the second one is, okay, well, you're deferring. Now is your situation warrant a little bit more advanced tax planning? And what we're talking about here, Gary, is, this is not anything that is, we're just creating ourselves. These are in the tax code of strategy, right? That's there. And one of the things in the family office environment is, one of their jobs, I mean, they'll have people on staff, full-time job is minimize the tax.
Right.
And they don't even prepare a tax return, Gary. That's different.
Yep.
They're looking at how can I minimize tax? So an example, right? This summer, the one big beautiful bill passed. Okay, who on your team is going through what has changed, right? And how does it affect you? And so it's really hard for a tax professional, if they're doing taxes, to also do the research and all of that. So we fall second bucket, Gary. And then the third bucket is more advanced strategy. Okay. So we can get into a lot of advanced strategy as well. And so we can kind of take it based on the client need, right? And it really is client to client.
Right.
Just because someone makes X amount of dollars, then how much is taxed, right? How much they take home can vary widely.
Yeah. So one of the things that you're pointing out is that typical tax preparer that somebody goes to is not going to, I shouldn't say not, most likely is not going to be able to do level 2 and level 3 tax planning like you're talking about. And people really need to understand that that tax preparer that you're going to is totally different than tax planning.
That is correct. Yeah. The tax preparer is, numbers in the box, making sure that you're reporting correctly. Because
Right.
ultimately, regardless of who does your taxes, you're the taxpayer, you're signing off on it.
Right.
So numbers in the box versus the planning piece on the planning side. And it can be as simple as, we get professionals that start out fairly young. Do I do my retirement plan through my workplace, and do I take everything deducted today because I'm in a higher tax bracket, or do I do this Roth 401k that I get no deduction today? So, we do a lot of projections and helping people think through, what might seem good this year may not be good for you in 20 or 25 years. So, that side of it. And then, as you said, it's absolutely true. The tax planning piece, unfortunately, Gary, kind of in what we do, I think tax planning has been overused.
Yes.
And so I look at it as that, that those two are tax planning. It's kind of overused. We do tax planning. Well, there, as I said, there's kind of three scenarios or three buckets, right? That people fall into. And so it's a wide spectrum of really what tax planning should mean for each individual.
Yeah. I think that tax planning has become a buzzword,
Yeah.
and people aren't, when they're talking about, oh yeah, I talked to my guy and he's doing some planning for me, and the planning is, hey, go out and buy another vehicle.
Yeah.
To me, that's not tax planning. And I think looking, short term, medium, and long term when it comes to the planning, just like you do with wealth advising and stuff, you're not looking just today, you're looking, okay, 5, 10, 15, 60 years down the road, for somebody depending on their age.
Yeah, I think your buzzword, you're exactly right. And, it's not, we tell people often that it's not product, oh, I'll save you on taxes, and I'm going to go buy an annuity,
Yep.
that it's about strategy and
Right.
making sure strategy wise, what are you doing? Right. And a lot of times people think, when we get into the mitigation work, so there's tax deferral, that's kicking the can down the road. So
Mhm.
anytime we hear tax deferral, it's like, okay, that maybe you save today, but you're kicking the problem. Mitigation is you don't pay it back.
Right.
So you're not kicking it down the road. So, there's things that you can do that are mitigating, right, your tax along the way. And just because someone hasn't heard about it doesn't mean it doesn't exist.
Right.
So, there's a pretty large world there that exists, on, more than just, like you said, the buzzword of tax planning.
Yeah. And I think that goes back to most people are used to dealing with the CPA or the tax preparer, that their world is getting tax returns done, compliance work. They don't have time necessarily to, I'm going to say, look outside the box. And it's really not that far outside the box. But that these are all strategies that the ultra wealthy have always had at their disposal. But now it's coming to where it's more, I'm going to say, more affordable. The threshold to get into isn't as high. You don't necessarily need to be an accredited investor to get in on some of these mitigating, tax strategies and so forth.
Yeah,
Um,
it's a great point, Gary, because I remember not too long ago, I mean, a lot of the, there were strategies and you had to have a net worth of 20, 25, 30 million, right?
right,
Plus, which really knocked a lot of people out. The other thing I'll say is, we have a tax team, we do taxes and so forth, and we do businesses and so forth. So we do complete the tax returns, but we do planning. But we even take it serious that we actually have on our team as a consultant, a firm that all they do, their CPA firm, all they do is tax planning mitigation work.
mhm,
They don't prepare one return,
yep,
and that's all they do. So we're serious about it to say we also have them because you know oftentimes it's not just one advisor deciding. We do it as a team,
right,
and more complex situations need a team, just like in medical. They don't make medical decisions,
yeah,
on some sort of treatment. Typically, you talk to those medical professionals, they have a team that they consult, right?
right.
And so that's exactly right. And it's gotten to the point where you can't do it all. You can't be a preparer and also a planner.
Yeah, it's definitely, tough, to be able to do that. Um, Many times, you hear somebody talk about, hey, well, my next door neighbor told me to do this because it's going to save me. Can you talk a little bit about that? Because that's one of the things that always drives me nuts is that it's like, oh, my neighbor told me did this and it's saving them, you know, thousands and thousands of tax dollars.
Yeah. Yeah. Well, I would hope that most people, when it comes to a bit more serious health advice, they don't take advice from their neighbor.
Right,
In fact, I had neighbors that were doctors in the past. And, my wife and I would ask, every now and then with one of the kids or whatever, and they would generalize it and go, oh, you should go see, fill in the blank. So
right,
they didn't even give the medical advice, really, because that was not what they're doing. So from a tax perspective, if somebody, there's just no way, if you have any sort of working career or whatever, and you're not doing this full time, to keep up is
right,
really, really tough. And every situation is a bit different. And you just don't know until you're into that situation. So, the way I share with people is, somebody could have $100,000 of income and the first person paid 20,000 in tax and the next person pays zero.
hmm,
Why? Well, it's because of the sources of income and how they're taxed.
right.
So just because it works for your neighbor does not mean it's going to work for you and what's best for you. And so it's gotten way more complex than just picking a portfolio. Portfolio is important. Picking a
Right.
hot stock, I mean, that's all good, but what we're talking about here is the comprehensive approach, right, to planning.
Would you say that tax is a bigger risk than the product or where you're putting your money?
It's pretty big. I mean, certainly where you're putting your money, when you have, if you're taking big risks there, right, and you have a tremendous downturn, right, you can lose a lot there. But there's also market regains, right?
Hmm.
When you lose from a tax perspective, you lost it.
Right.
So the year is over. There is no regain of it. if your accounts go down based on markets, and you hang on to it and it's a good portfolio and all of that. But bottom line is it's probably coming back and then growing then some. When you give it up from a tax perspective, it's gone. The other thing we look at as people get into retirement is lifetime tax.
Right.
We look at it year to year, snapshot to snapshot, but you got to look at what your lifetime tax is. And we're seeing lifetime taxes in retirement increasing. Two major reasons. One is larger qualified money, IRAs, 401ks, distributions required off of those. Often people have millions in that account that has yet to be taxed.
Right.
And those required distributions will push people way higher than they expect. Secondly is life expectancy.
Right.
So when you add up those two, people's lifetime tax in retirement, right, can be a huge nut.
Right.
And often it's way more than any healthcare.
Right.
I think, yes, tax is up there because, again, once it's lost, it's gone. It doesn't market regain. And so it's just becoming a bigger part of the overall planning.
So if somebody's looking for a CPA or a group that does tax planning, again, many people on their website are going to say, hey, I do tax planning. What are some of the questions that you should ask them to find out if they're truly a tax planner as compared to just putting that out there?
Yeah, it's a great question. So a couple things. One is that if it's under investment financial advice, if they don't ask for a tax return when you first meet them and they're starting to gather information, that's probably a hint. Because a lot of advisors don't even ask for a tax return. If you get into a CPA firm or even investment advisory, financial advisory firms, who's there to help guide you. What I would look for is they're taking your past return, past year, maybe 2 years, and then say, I want to lay out a scenario, right? Show me, how do you do the planning? What are your ideas, right? High level. They should be able to come back with, here's where you're at. Here's where you're at projected this year. Here's what we're thinking before you engage with them.
Right.
In other words, they should be able to show you, right? And do some comparisons. That'll give you a good sense of the tools that they have. Okay. And what their approach is to the overall situation versus, yeah, we do tax planning, no problem, we can handle it. Okay, well, I want to see, right? You don't have to give me particular advice, but we always, when we're talking to someone new, we review their information and we show them high level how we're thinking about it. I think that'll be a good sense. You'll kind of pick up whether they would have the capability of doing that.
Yeah. And you guys are doing that without necessarily collecting a fee up front.
Correct.
And
Yeah,
then,
how we do it.
Then there's
yeah, what we
the
do,
tax
Gary.
plan.
Yeah. So we gather information and then we will do a preliminary analysis for a couple reasons. One is we want to make sure we are able to provide value.
Yep.
So, we're not selling a product. We need to provide value and the advice and make sure we can make a difference. And then B, what you were mentioning is they can see the value that we provide. So, and of course, portfolios and how you're managed and risk, and that's all important too. But that's why we do that up front. We found that it saves both kind of time in the end. We want someone going, okay, I understand this is what, how they're going to provide value.
Yeah. I've spent a lot of time. We haven't even talked about any of the investment side of stuff. We've talked more about the tax planning side. And the reason why I've really done this is because, there is so much talk about, the economy and where things are going and what people are doing. And, currently we're at a historic low on tax rates.
Yes.
So I think that it's extremely important for people to do real true planning, not just with the wealth, but with their taxes. Because there's not the pension plans around anymore, or talk about Social Security. Is it going to be there or not be there? And I think that it's really important, and even for the younger generation that's just starting out, um, you need to save and you need to think, planning out in advance. And like you said, looking at what's that lifetime tax going to be. Because I have seen a lot of people that have put their heads down, just keep sticking away in these qualified plans, and then the theory behind it has always been, hey, when you start drawing that money later in life, you're going to be in a lower tax rate. Well, that's not necessarily happening anymore, and that's where it's like, if you're not doing this planning, you could get caught in retirement paying way more in taxes than you ever did when you were working.
That is absolutely true. And it's the way the positioning of the assets, as I mentioned, IRAs, required distributions. We work with a lot of clients that are paying the most, or they would pay if they didn't plan.
Right.
But we're dealing with much higher taxable, bottom line, this is what you're
Yep.
paying, than they did when they were working. And there's a lot of reasons behind it.
Hmm.
Even higher Social Security amounts.
Yeah.
Social Security amounts now, if you've paid in and you're married, couples paid in over the years. I mean, the amount that people get in Social Security is much higher. And obviously most of that's taxed. So all of these things come into play, Gary. You said it exactly right, that you're not necessarily going to be in a lower tax bracket. When I started in the business, it was put it in pre-tax, you're going to be in a lower tax bracket,
Right.
but we didn't assume kind of the savings rate within these plans that are going to get pushed out, right? And it's the worst asset to leave to your loved ones,
Yeah.
your beneficiaries. So that's what's also got that, as you said, lowest tax rates right now. That's another part of it. So this is why over the last decade we really focused on bringing this piece in and helping be a CFO for clients.
Right. Right. Erik, we talked about a lot of good stuff, and I'm glad we've had this conversation. What have I not asked you? You wish I had.
Um, well, on estate, that's another area that we really, walk with people to get their estate done.
Hmm.
Probably 2/3 of the, depending on what you look up, 2/3 of the US don't have an estate plan.
Yep.
And we just hate it when people don't plan an estate. So maybe that's another podcast to talk
Yeah.
about
Yeah.
it.
Yeah. Yeah. That's
But
2.0.
yeah, right, exactly. But often it is too. I mean, people, you don't want to talk about it because obviously you're passing away. But it's also another important piece to make sure what you've worked and built for gets passed efficiently.
Definitely. So, Erik, if people like what they hear, they want to learn more about you, more about Hilltop Wealth and Tax Solutions, how can they reach you?
Yeah, so I actually wrote a book about what we're talking about. It's called the Personal CFO Revolution, and they can go to hilltopwealthtax.com/podcast. Hilltopwealthtax/podcast.com. I think I said that wrong, but they can find a free copy. They can download a free copy of that book there. If they want to have a conversation, we start out with a 15-minute conversation from someone on the team, just find out more about you, and you find out a little bit more about the firm. And then we see if there's a fit to meet with one of our wealth advisors. But the book's really great. I've gotten a lot of great feedback on it, and it talks about a lot about what we're talking about here. And I think it'll give people some really good direction and strategy and ideas.
Great, great. Erik, really appreciate your time today. I think you've given people a lot to think about, and definitely want people to heed your advice.
Gary, I really appreciate it. Thanks for having me.
Great. Hey, this week our guest was Erik Brenner, and he is the president and CEO of Hilltop Wealth and Tax Solutions. And I'll see you guys next week.